Welcome to the Recon Trader. In today's video, I will share with you some tactical analysis over on the Bitcoin charts, as Bitcoin's price has been pumping over the last couple weeks, but this price action does look very similar to what would be called a bear bounce. And as Bitcoin continues to fail to get above 25,000, we could see Bitcoin's price roll over. So with that being said, let's get into the charts. And we will start over here on the 4-hour candles for Bitcoin USDT over on the Binance exchange. And over the last couple weeks, Bitcoin's price has slowly been grinding up, so it's in a slight uptrend. However, Bitcoin's price has recently, in the last week, pretty much has run into a line of resistance around 25,000, and that was actually a key level we were looking at last week for Bitcoin to break through. If Bitcoin could get up above and hold above 25,000, then we'd be looking for a bigger push up. However, it has failed to hold above 25,000, and thus it could be in danger of rolling over, and all this positive momentum could be lost if Bitcoin loses key levels of support. Now, if you're curious what those key levels of support are, I'll drop in my EMA ribbons. And if you're not familiar with how to use EMA ribbons, I basically use them for support and resistance and trend direction. And if you look back here, all the way back to when Bitcoin started to pump, you can see once the price got above the ribbons and the white line, which is the 200-day moving average, it actually then used the ribbons and the 200-day moving average as support on each one of these pullbacks and then bouncing higher. Now, once it broke down below the ribbons and even briefly dipped below the 200-day moving average, that's obviously bearish price action, but it turned right back around, got it back above, consolidated for a while, and now once again Bitcoin is essentially using the ribbon as support. If Bitcoin's price breaks down below and continues down towards this 200-day moving average, that is actually the line in the sand I would be watching most closely, and that's going to come in right around 23,000 USDT, which would make sense as that level would be towards the bottom of all these candles here. And so really, if we get a breakdown below 23,000, then you're kind of setting up a zone of probably 23 to 22,000, a break below 22,000, and then we could be headed back down to 20,000 or even 19,000. Now, on the flip side, if the buyers can actually step up, push up Bitcoin's price above 25,000 and hold it above 25,000, then we're looking at targets probably back up around 28,000, which could then lead to filling the gap over on the Bitcoin CME futures daily chart, which is this gap right here. But again, last week we dropped in this resistance zone, and currently, as you can see, Bitcoin has failed to close above this resistance zone. And so we can actually extend that zone over here to the beginning of this week on today's candle being Monday. And again, until the bulls can push this price above and hold above 25,000, I would just look for more consolidation, or the price might get one final rejection before selling back off. Now, if we jump back over here to the Bitcoin USDT chart on Binance and the 4-hour candles, and if I draw in my Fibonacci retracement tool from the low of 18,910 back here up to around 25,000, essentially would be the zone I'm looking at, you can see the 382 level is coming in at 22,673, and you can also see that that is a valid area of support. Price came in and touched it here. It dipped just below before getting back above. We get a whole bunch of touches right in this area, and even back here where the price started to take off, you saw some wicks down to that area. And so with that being said, the 382 Fibonacci retracement level, or 22,673, is going to be a key level of support for this current price action that is essentially somewhat moving sideways, albeit it is slightly trending up. And if I drop in a trend line, you see somewhat of an ascending triangle between 25,000 and this trend line. And so as Bitcoin's price squeezes down into the tip of this triangle, will we get a breakout or will we get the dump? And if Bitcoin does break out towards the top side, if you measure between the top line here down to the beginning of this ascending triangle, that would actually put your price target just above 29,000. So that 28 to 29,000 level would correlate to the gap fill over on the CME futures. Now on the flip side, if the Bitcoin's price breaks down, then the price target more than likely is going to be back here around the 786 level, which is just shy of 20,000, or perhaps even a breakdown below that, back down to around 19,000. Now, if we jump over here to the daily candles for Bitcoin, you see Bitcoin's price is holding currently above the EMA ribbon. However, the EMA ribbon has yet to flip bullish, which means your greens and blues would be on top of your reds and yellows. Right now, the red is still on top, so we could have just seen Bitcoin run into resistance right here at the 50% Fibonacci level, which is coming in right at around that $25,000 price range. And if that's the case, we could just see this price roll over. And again, if Bitcoin's price does sell off, breaking this trend line, we could see the price sell off to the 786 level, which falls right around 20,784. After that, on the daily charts, again, we could be looking at the 18 to 19,000 level. However, Bitcoin's price could just as easily revisit the 17,600, which would be the low back here. And again, with the EMA ribbon still bearish with the reds on top of the greens, and in reality, until Bitcoin's price can actually probably get above what you see, the orange line, that's the 120-day moving average, until Bitcoin's price actually gets above that, and probably more than likely actually back above this zone here, where there was a lot of resistance, which is between 30 to 32,000. The possibility of this being a bear bounce is more probable than actually Bitcoin has put in its bottom. Now, one last chart to take a quick look at, and that's going to be the weekly chart for Bitcoin. And last week's candle that closed, albeit yesterday, today is Monday, this candle closed on Sunday, it did actually close above the 1618 level, which was a previous level of resistance. And so that is actually a bullish close. And as long as Bitcoin's price can hold above this 1618 level, which is right around 23,478, call it 23,500, that certainly could continue this bullish momentum. However, if the price closes back down below the 1618 or 23,500, this most recent candle close might have just been a fake out before we actually see the ultimate dump down back towards the lows or even lower. And so I think that's enough jaw-jacking for this video. What we are currently looking at could very well just be a bear bounce, so beware of that possibility. And with that being said, if anything major changes over here on the Bitcoin charts, I will do an updated video. So now would be a good time to shoot that subscribe button so you don't miss out on future videos. If you like this video, do me a favor, spike a like. If you have questions, comments, drop them in the comment section down below. And until next time, remember, never send your money into battle without first doing your recon. See you in the next video.